Good news is arriving for millions of Americans, especially older adults who depend on steady income to maintain their daily lives. A major IRS update has confirmed that stimulus-style payments are scheduled to begin on February 17th, bringing renewed attention to financial relief programs at a time when many seniors continue to feel the pressure of rising costs. From groceries and prescription medications to housing and utilities, everyday expenses remain higher than many retirees expected, making any additional support not just helpful, but deeply important. This update signals that federal agencies are continuing to review financial conditions across the country and are taking steps designed to stabilize households that rely heavily on fixed incomes. For many seniors, financial certainty is more valuable than almost anything else. Retirement is supposed to be a period of stability. Yet the past few years have introduced economic shifts that few could have predicted. Inflation changed spending habits, healthcare costs continued their long upward trend, and housing expenses surprised even longtime homeowners. Against this backdrop, news of incoming payments naturally raises hope. But it also brings confusion. Many older Americans want to understand exactly what this payment is, why it is arriving now, and whether they are among those expected to receive it. The Internal Revenue Service has described this February distribution as part of an ongoing effort to ensure that eligible Americans receive funds connected to previously authorized relief measures and tax credit adjustments. While the word stimulus often reminds people of the emergency payments issued during times of crisis, today's financial support operates somewhat differently. Instead of broad nationwide deposits sent to nearly every household, newer payments tend to focus more carefully on eligibility data already recorded within federal systems. That means tax filings, benefit records, and income reports play an increasingly important role in determining who qualifies. Older adults often worry that programs tied to tax records may overlook them, especially if they no longer file returns due to lower income levels. However, federal agencies have spent years improving coordination between departments, allowing benefit information from Social Security and other programs to help confirm eligibility when traditional tax filings are not present. This coordination has quietly reduced the risk that vulnerable populations fall through administrative gaps. The February 17th timeline did not appear suddenly. Behind the scenes, federal financial agencies routinely evaluate payment systems months before funds are released. Payment infrastructure must be tested, records verified, and fraud protection strengthened. Got it. Below is a fully rewritten original article/script in U.S. English, written for a U.S. audience, in a smooth storytelling flow, no headings, no hook, and no bullet points. It includes a natural intro mentioning your channel, Rais Money Talks, clear explanation throughout, 2 soft CTA comments placed naturally, a strong outro, asking viewers to like, comment, and subscribe. Written as a YouTube narration-ready script. Calm, trustworthy, senior-friendly tone. I've kept everything in continuous paragraph flow, just as you requested. Welcome back to RIAS Money Talks, a channel created to help you stay informed, confident, and prepared when it comes to retirement, Social Security, and financial updates that directly affect your daily life. Today's update focuses on recent February payment developments and why they matter far beyond the dollar amount itself. While much of the work behind these deposits happens quietly and out of public view, the preparation involved plays a critical role in making sure funds arrive safely, accurately, and on time. For many seniors who still remember the delays and confusion of earlier relief efforts, this smoother process is not just convenient, it is reassuring. It signals that federal systems have learned, adapted, and matured, creating more dependable outcomes for those who rely on them the most. Understanding why these payments are arriving now requires stepping back and looking at the broader economic picture. Over the past year, policymakers have increasingly acknowledged that while inflation headlines may rise and fall, the everyday reality for retirees often tells a different story. Seniors typically spend a larger portion of their income on healthcare, housing, and food, areas where costs have remained stubbornly high, even when other sectors showed signs of cooling. For retirees living on fixed incomes, even small increases can throw off carefully balanced monthly budgets. When income does not adjust quickly, pressure builds quietly but steadily. Another important factor behind these payments is the growing recognition that many retirees entered this decade with financial plans designed for a completely different economic environment. For years, interest rates remained historically low, limiting growth for conservative investments commonly used by older households. When rates eventually rose, borrowing costs followed, affecting credit balances, insurance premiums, and housing-related expenses. Policymakers understand that sudden shifts like these can be especially difficult for those who no longer have employment income to absorb unexpected costs. The February deposits reflect more than a single decision. They are part of a broader effort to reinforce financial resilience among Americans whose earning years are already behind them. While no one-time payment can solve long-term affordability challenges, timely assistance can provide breathing room. It can help households catch up on bills, handle an unexpected expense, or rebuild a small emergency cushion. For seniors who rely primarily on Social Security, predictability matters just as much as the amount received. Monthly benefits are often budgeted down to the dollar. When an unplanned medical bill, home repair, or insurance adjustment appears, it can immediately disrupt that balance. Additional payments offer flexibility that many retirees simply do not have within their regular income streams. If this kind of support has made a difference for you or someone you care about, feel free to share your experience in the comments below. Your insight may help others feel less alone navigating similar challenges. It is also important to remember that eligibility for these payments is rarely determined by age alone. Federal programs typically evaluate income levels, tax filing status, and benefit participation. Some retirees assume they automatically qualify because they live modestly, but eligibility often depends on verified financial data. This is why keeping records accurate and up to date remains one of the most effective ways to avoid complications when payments are issued. The systems rely on matching information across agencies, and accuracy helps ensure smoother processing. Many seniors remember the early stimulus programs as moments of relief during uncertain times. Those payments demonstrated how quickly federal systems could mobilize when economic stability was threatened. Today's environment is different, but the underlying goal remains familiar, providing targeted assistance where it is needed without destabilizing the broader economy. Over time, the IRS has evolved far beyond its traditional role of tax collection. It has become one of the federal government's most efficient payment distributors. Direct deposit, once optional, is now the preferred method because it reduces delays and enhances security. Security is especially important whenever large-scale payments are discussed. Unfortunately, scams tend to increase whenever government funds are announced, often targeting older adults through phone calls, emails, or text messages that create a sense of urgency. Official agencies consistently remind recipients that legitimate payment processes do not require fees, passwords, or personal information through unsolicited contact. Staying cautious protects not only the payment itself, but long-term financial well-being. Awareness remains one of the strongest defenses. The February payment timeline has also reopened conversations about retirement planning. Financial professionals often remind retirees that temporary assistance should be viewed as supplemental rather than permanent income. Thoughtful budgeting helps ensure that one-time payments strengthen stability instead of disappearing into routine expenses. Even small adjustments can stretch support further and preserve flexibility for future needs. Another encouraging aspect of this update is the increasing recognition that seniors are not a single uniform group. Some retirees enjoy comfortable savings, while others depend almost entirely on federal benefits. Effective policy requires understanding these differences. Targeted payments reflect an effort to address vulnerability without assuming that every household faces the same circumstances. Healthcare costs continue to be one of the greatest financial pressures for older Americans. Even with insurance coverage, out-of-pocket expenses for prescriptions, treatments, and specialized care can accumulate quickly. Supplemental payments help offset these burdens, allowing seniors to prioritize health without sacrificing essentials like housing or food. Housing stability itself has become a growing concern. Whether owning or renting, many retirees face rising property taxes, insurance premiums, maintenance costs, or rent increases. When housing consumes a larger share of income, flexibility elsewhere becomes limited. Additional funds help restore balance and reduce stress. Food prices also play a role in shaping policy decisions. While inflation reports focus on averages, seniors experience costs directly at the checkout line. Many older adults adjust habits, switch brands, or cut discretionary spending simply to stay within budget. Financial assistance acknowledges that responsible adjustments should not come at the cost of nutrition or quality of life. Beyond finances, these payments can influence emotional well-being. Constant money concerns create stress that extends far beyond bank accounts. Knowing that support exists can ease anxiety and allow retirees to focus on health, family, and daily routines instead of constant calculations. Federal payment systems rely heavily on accurate identification and verification. Names, addresses, and banking details must align to prevent errors. While seniors who recently moved or changed accounts may worry, improved technology and cross-checking systems have reduced disruptions significantly. As February 17th approaches, anticipation naturally grows. For some households, the deposit will feel like a welcome surprise. For others, it confirms that federal programs continue to evolve in response to real-world conditions. The conversation surrounding stimulus-style payments highlights a broader understanding that retirement security is not only a personal responsibility, but a shared priority. Decades of work contribute to national strength, and supporting older Americans honors that contribution. In the weeks leading up to distribution, agencies finalize verification steps designed to protect recipients and taxpayers alike. These safeguards are rarely visible, but they form the backbone of reliable payment systems. Many seniors notice that the process now feels smoother than in years past, reflecting technological improvements that reduce delays and errors. The February update sends a message that policymakers remain attentive to the realities retirees face. Economic conditions change, and responsible governance requires adapting to those changes thoughtfully. For retirees watching their budgets closely, this moment offers more than financial relief. It offers recognition. Recognition that aging in a dynamic economy brings unique challenges that deserve practical responses. If you believe updates like this help bring clarity and peace of mind, take a moment to comment below and share what topics you would like Rais Money Talks to cover next. As deposits begin reaching eligible households, it is worth reflecting on what they represent. They reinforce stability, dignity, and confidence. After a lifetime of contribution, retirees deserve to look ahead with calm rather than concern. Financial security in retirement should not be fragile. It should be supported and protected as conditions change. Staying informed allows seniors to plan instead of react, and that ability alone carries tremendous value. If you found this update helpful, please take a second to like this video, share it with someone who may need it, and subscribe to Rais Money Talks for continued updates on Social Security, retirement income, and financial changes that matter to you. Your support helps this channel continue delivering clear, reliable information so that you can move forward with confidence, stability, and peace of mind.